Is your mortgage credit score high enough? If you know what you're doing, it's like having the combination to a vault. You can unlock a great credit score. When you're going to buy a home, your credit makes a huge difference. And even if you have low credit scores now, if you get these 5 things that we're about to talk about, if you get them right, your credit score can be golden. My name is Kent Cochrum, and my team and I help people get the mortgage that they need to buy or refinance their home. A few years ago, I had clients, we'll call them Adam and Michelle, who came to me asking about how to get a mortgage. They'd been through a rough time paying their bills because of health issues and losing a job. But they were healthy now, both of them had good jobs, and they were starting to turn things around. They were making all of their payments on time and just beginning to pay off some debt. Adam and Michelle were renting an apartment, and one of their goals was to buy and own their own home. So that's why they were talking to me. They'd need a mortgage to do it. Both of them seemed eager to start, but I have to say I wondered, would they be determined and work hard enough to make it to their goal? I'll tell you their story as I give you the 5 tips to improve your credit score. Tip number 1 is to check your credit report. We set up a plan, and our first step was to look at Adam and Michelle's credit report. Information about your credit is held at the 3 major credit bureaus, Experian, TransUnion, and Equifax. And each of these companies gives you a score for your credit. They look at how well you make your payments on time, how long you've had credit, how much debt you carry, and some other factors as they calculate your score. Most credit scores are between 650 and 750, but yours can be higher if you do the steps in this video. Adam and Michelle's credit scores were pretty low enough that it would be difficult to get an affordable mortgage to buy a home. They needed to do some work, and checking their credit gave us a starting point, and we made a plan. From the report, we could see that Adam had some collections and late payments. Michelle didn't have as many late payments, but she had some high balances on a few cards. They were maxed out. All of this was lowering their scores. By straightening up their credit and raising their scores, Adam and Michelle could dramatically improve their chance of loan approval and buying a house with a really good interest rate. Now, it's a good idea to look at your credit report on your own, and you can get a free credit report at annualcreditreport.com. You fill in your information online, you verify your account, and in a few minutes you can see your report. Checking your credit will help you by showing you your current balances and payment records. It'll also let you know if you have any extra credit accounts showing up in your report. This could be something fraudulent, or it could just be something that you've forgotten but might need to be closed down. By the way, I'll give you a link in the video description for a free step-by-step guide to help you implement what you learn here. And that guide will contain all the other links that I mentioned in this video. And if you'd like to work with me and my team, we lend in 44 states. So just give me a call. I'd be happy to help you. All right, back to your free credit report. I recommend that you check your credit every year. Take advantage of the free report. That way you can stay on top of what's in your records. Tip number 2 is to build a positive credit history. Now, I want to make sure that I mention that our baseline assumption was that Adam and Michelle were now making all of their payments on time. Making your payments on time every single month is a must for good credit. The longer you have good credit, the higher your scores will be. Many of our clients who are in their 50s, 60s, and 70s have credit scores above 820. Now, maybe you don't have any credit history at all. There are a few things you can do. First, make sure you have a couple of utility bills like phone or electric in your name only and maintain them with a good payment history for at least a year. We have mortgage programs that we offer at our bank where we count your phone or your insurance bill or other utilities as proof of on-time payments. But we need at least 2 accounts for this. Second, you might also check with your local bank and ask to apply for a secured credit card. This is where you open a savings account with a few $100s and then you receive a credit card for the same amount, but they're linked. Since you have cash sitting with the bank to pay off the card, the bank is comfortable giving you the account with no credit history. So that's another way you can add an account for additional credit. Tip number 3 is to take care of any unpaid medical collections and negotiate for pay to delete agreements on any of the other collections. A collection occurs when a debt hasn't been paid for a long time and the creditor sells it to a collection agency. Then the collection agency might just hold on to the debt quietly, or they might start calling and mailing to try to get the money back. And unpaid collections can really hurt your credit score. Now, for the purpose of improving your credit score, collections fit into one of 2 buckets, either medical or all the others. And as I said before, Adam had some debts that had been placed with collection agencies. So we put together a plan for Adam to deal with the collection accounts. Adam's job was to call each collection agency and negotiate a pay-to-delete agreement for any non-medical collection accounts. He would ask for the lowest amount of money that the collector would accept to completely wipe the collection off the credit record. If the collection agency agreed, Adam would get that agreement in writing, and then he would pay the amount that they required. Now, fortunately, all of Adam's collectors agreed to the deal. It was just a matter of paying them off as he was able to free up the cash to do it. Now, if the collection agencies had not agreed, I would have advised Adam to leave the accounts alone and only pay them off if it was required to get a mortgage or some other credit right away. Paying off an account but having it remain on your credit report can actually result in lower credit scores. For any medical accounts showing up, Adam could pay these off with or without a pay to delete agreement, and they would drop off his credit automatically once they were paid. Now, if you're applying for an FHA loan, FHA will allow unpaid medical collections up to $2,000, so you might want to check with a mortgage banker or broker before you pay any of your medical collections off. And I want to warn you as we go into this, at times debt collectors can be a little tough to work with. It's important to know that the Fair Debt Collection Practices Act protects you, the consumer, from harassment. If harassment becomes an issue in this process, you can find more information on the FTC website and fight back. All right, that's tip number 3. Pay off any medical collections that appear on your credit and pay off any other collections if and only if you can negotiate a pay to delete agreement. Tip number 4 is to manage your credit inquiries. There was something else we noticed that was dragging down Adam and Michelle's credit scores. They had a lot of recent inquiries showing up on their report. They had shopped for a new car and had been trying to get a couple of new credit cards. Each time they were turned down, they would try it elsewhere. Well, here's what happens though. Each time a company checks your credit, they make an inquiry, the credit bureaus record it, and it can lower your score by a few points. Now, fortunately, the credit bureaus do a great job interpreting what consumers are doing, and if you do shop for a car like Adam and Michelle did, the bureaus will usually count multiple inquiries in a 2-week period as one. But you still want to avoid multiple credit checks, especially for credit cards, which can make your score drop. So part of the plan we made was for Adam and Michelle to stop applying. No more credit card applications, no more car loan applications, nothing. There would be more than enough time to buy a car or get a new credit card after they bought their new home. They agreed to this plan and they stopped applying. We knew that in 3 to 4 months, the effect of the inquiries would diminish and their scores would go up. Now, by the way, if you're finding this information to be helpful, please hit the like button. It helps with the YouTube algorithm and this information can go out to more people. Tip number 5 is to keep your credit card balances low. I mentioned before that Michelle had several credit cards with high balances. The payments were manageable, but honestly, she was pretty stressed because she had maxed out some of her cards. What you need to know is that the credit bureaus reward you with a better score for using a lower percent of the money available on your credit lines. Michelle was doing just the opposite, and she was being penalized in her score. Now, a good rule of thumb is to always keep your credit card balances between 1 and 10% of your credit limit and pay them off every month. A little bit of credit that you pay off regularly is good, a lot is not good. If you can't keep your credit card balances between 1 and 10% of your credit limit, at least try to keep your balances at or below 30% of your credit limit. You can often pick up several credit score points by paying an account down by just a few $100s. For example, if you have a $500 balance on a card with a $500 maximum credit line, you can pay the account down by $350. It's not that much money, but it can make a big difference in your credit score. So here was my advice to Michelle. The first step was to look at all of her revolving accounts with balances. We calculated the minimum amount she would need to pay each company to lower her balance to 10%. Then her job was to pay the cards down to those levels and keep them low, starting with the smallest balances first. I often find that my clients are tired of one large account and want to focus on paying it off entirely. But it's so much more strategic and it'll give you a higher score to pay multiple cards down. You want to do that instead of just paying one large card off. So remember that, be strategic, play the long game, and pay the accounts down from the smallest to the largest first. You want the most accounts possible to be paid down. After you pay everything revolving down to 10%, then you can start eliminating the debt entirely one by one. And once again, I recommend that you work your way up from the smallest to the largest. By the way, this tip only works with revolving lines like credit cards. I mean, you should pay everything off, of course, but it won't really help your credit score very much to pay an installment loan like your car or your student loan down to a lower percentage of the original amount. So Michelle took immediate action and began paying all of her revolving cards down, starting with the smallest balances first so that she could pay down as many as possible. After a few weeks of watching Adam and Michelle work to improve their scores, I was really impressed. Many people will start or will at least have the initial conversation about their credit, but in my experience, very few actually follow through and make things happen. These guys were doing it and they were making great progress. When the time came to recheck their credit a couple of months later, the results were amazing. Adam's credit scores had improved by almost 50 points and Michelle's had increased by more than 40 points. They were ready to buy a home with a competitive interest rate. And what's more, with the newfound knowledge of how the credit system works, their scores continued to improve and they were able to maintain high credit scores from then on. They did it, and so can you or someone you know. Improving your credit is an important way to get ready to apply for a mortgage, but it's not the only thing you need to do. So if you'd like more information about how to get ready to apply for a mortgage, you can subscribe to this channel. And when we post a new video, it'll pop up in your account. So if your credit scores are low and you do everything we said here, I can promise you your credit score will improve. If you want to buy a home and you want helps with the steps that we talked about in this video, one of my team members would be happy to talk with you. Just reach out and let me know. And if you've already done everything we talked about, check out this video on the screen where you can learn more about getting pre-approved for a mortgage.